Good afternoon, everybody, and thanks for joining us today. Welcome back to the NWR Security Technology Virtual Investor Conference. On the call today, we have TZ Limited CEO John Wilson. I'll pass you across in a moment to John to kick off our discussion of TZL. Today, we'll have a presentation from John, followed by an opportunity for Q&A. If you would like to ask a question during the call, please type it into the Q&A panel in the Zoom app. So to kick things off, I'll hand over now to TZ Limited CEO, John Wilson. Go ahead, John.
Oh, thank you. Thank you, Tim. All right. Thank you, everybody. I'm going to talk a little bit about TZ, give you a bit of an introduction and tell you a little bit about what we're doing. So firstly, our standard disclaimers before the presentation, but let me go straight into a slide about our company. So for those who don't know TZL, TZ Limited is a global provider of secure smart locking access control smart locker solutions. We have 4 wholly owned operating subsidiaries that support sales to the key regional markets of the USA, Europe, Asia, and Australia. We're listed on the ASX, and we have a quality register with the top 20 shareholders owning about 75% of the company. Now, the majority of our sales, approximately 90%, are in the smart locker application space. For those who don't know what smart lockers are, they are secure storage compartment solutions that are managed, that are integrated with integrated computing, sensing capability, and they manage user access or enable automated distribution of packages. Our solutions include turnkey system supply, electronic lock supply with associated software through cloud-based subscriptions. Now, what's unique about TZ is that we are the preferred supplier to some of the world's most recognizable brands. This slide shows you the corporations that we can call customers and who continue to purchase from TZ. Another part of our business, or the balance of our business, is the data center market, where we provide access control electronic locking to secure data center cabinets. Now, once again, this is controlled by software under a subscription model. And again, TZ provides solutions to some of the major data center operators around the world. Here in Australia, I would say that we are the leading provider supporting the big data center players like NextDC, Macquarie Telecom, and Fujitsu. So now a little bit about our business. We currently operate around the $15 million turnover mark, of which about $4 million is in recurring revenue. I came back in March of last year as CEO to run the company. And as a result of some major restructuring of our operations, we've been able to very successfully turn the business around into profitability. And we're forecasting around a $700,000 profit, which is a massive turnaround from the $4+ million loss of last year. Now, we have some real opportunities in terms of going forward. We've right-set the company over the last 12 months, and now our focus really is about growth. Now, in our traditional markets, there are opportunities to certainly improve our penetration. For example, the US educational sector, where we do actively participate, remains a very large and attractive addressable market for us. Quadient is the market share leader in the US, and recently they announced that they had just completed their 200 locker bank installation in the higher educational sector in the US. Now, given there are over 4,000 colleges and universities in the US, there's enormous potential there for growth. And also with our customers like Apple, Microsoft, and the large property developers and real estate organizations like CapitaLand in Asia, we have potential to just expand our business organically within their extensive operations. But what TZ really needs is a game changer, something that can offer a diversified revenue stream and can drive a new level of exponential growth. So we're actively exploring potential acquisitions in the tenant app space. This will be dictated really by the potential prospects and what we can afford based on a debt-funded model. We will not be looking at raising any equity to support this. Right? The market for tenant apps is growing very, very strongly. In Australia alone, there are 368,000 high-rise residential apartments. In the US, that number is closer to 5 million. A tenant app can be sold into a diverse range of property types: mixed-use projects, build-to-rent market, aged care market, community-based organizations. And all of these market segments offer very high growth potential. Okay, so what's a tenant app? Well, tenant apps in general are fast becoming a basic utility for all properties. They manage tenant communication. They streamline tenant services such as facility bookings, payment services, rental administration, service and maintenance requests. Now, it's essentially a community service platform, or even a micro social platform, if you want to call it that. Why is it a good fit for TZ? Well, firstly, TZ currently supplies smart locker solutions to the residential market, to residential properties. Lockers are a standard utility for residential properties to manage, tenant package deliveries. What that means is we have an established customer base of residential properties, property managers, and property owners in all the markets that we participate in: US, Europe, Singapore, and Australia. The tenant app participates in exactly the same sectors with the same customer type. So there's a real opportunity to bundle and pull through sales as an extension of the TZ offering. Furthermore, the tenant app business is software as a service subscription business, which means it basically can leverage off the same TZ capabilities as we currently have: cloud-based infrastructure, security compliance, and obviously our software development capability. Now, with our regional operating subsidiaries in the US, in Asia, in Europe, and obviously here in Australia, we can rapidly take the app internationally into markets where we already participate. We have the registered operating companies, the regulatory compliance, and in-market presence and resources to actually support a market launch. What we're talking about here is really speed to market. And the tenant app market is also extremely interesting. There are many players in that market at the moment, several of which are very large, who are actively expanding their services, either through acquisition or organically with expansion capital. We believe that a company that can offer a tenant app capability with complementary smart locker, locking, and access control security solutions has a very compelling market proposition. That's really our intent and where we're planning to take the TZ business. Thank you for the time. I'm happy to take any questions.
Thanks very much, John. That was a nice, succinct appraisal of the opportunity in front of TZ, the base business, as well as sort of where things could go in the future. So, yeah, certainly happy to hear all the questions that investors have got. So please pop them into the Q&A panel, and we can address them that way. In terms of your base business, John, can you give us some insight into, I guess, the go-to-market plan for all those household name commercial customers and others that you're going after? Can you sort of talk to sort of what the sales cycle looks like? What would contract value typically be? And I think there's clearly a recurring component there, sort of how much weighting that gets and what kind of margins are involved in that whole transaction.
Yeah, so effectively, when you look at our business, we obviously have a hardware component. Most of the time it's electronic supply. Sometimes it is actually full turnkey where we supply the locker as well. And then there is a software subscription component, which is the recurring revenue element. So no deal that we do is done without a software subscription. And that's really contributed to the growth in our recurring revenue. We have an established customer base, and they are across multiple sectors. So in the US, the dominant market is the educational sector. In Australia, it happens to be the corporate sector. In Europe, it's also the corporate sector, but their focus is more on IT asset management, and also inventory control systems. And in Asia, it's very much in the end of trip locker or the employee storage locker markets. It does vary from region to region, but we have an established base of customers, a great track record of success. And with the big name customers that we do have, it does allow us to leverage and springboard into building relationships with new enterprise customers. That's really our traditional market, and that's why I say, there's some great opportunity to focus our energies in various sectors that we currently participate in and penetrate and actually build on what we've done over the course of the last 12 months.
It's impressive, and to that point you made earlier about the huge penetration opportunity that you see in US colleges. In terms of the materiality of each of those as a win, would it be reasonable to sort of expect for investors to expect TZ to be making similar types of announcements to the one that we saw in November with a purchase order from a European logistics company? Is that sort of what we can expect by way of sort of news flow and catalysts, do you think?
That's a very large order, and that's really in the logistics space. It's a little bit different. Most of our business, particularly in the educational sector, is probably, there are a lot of deals. There's a bit of seasonality involved, but there are a lot of deals that sort of are in the 300,000 to $500,000 range. Okay, and that's fairly typical. Most colleges and universities, they've quite, the US market surprisingly is quite slow to adopt new technology, despite what you might think. And so what we're seeing is that there's the big leaders go first, the early adopters. That's who we're with. I mean, we've got some fantastic customer references in the educational sector, like Princeton, Virginia Tech, University of Charleston, University of Tennessee, and so on. So big name universities. And then you'll see that what will happen is that the smaller followers will come through. And that's what we're seeing right now. That's why I say there's a lot of growth. But even with a small implementation, you're talking 300,000 to $500,000 sale.
Yeah, well, if there's one thing we know about selling to educational institutions, it's that they can be tough nuts to crack sometimes. But once you're in, you're often you're well set, and then you do get people following the leaders, as it were. So that'll be interesting.
I think it's interesting because the US market, and if you look at the change in the US market, it's very different from Australia. The educational sector market in the States are very much campus-based businesses. So students live on site or live near the university. There's usually a mail center, so that basically those organizations or those mail center operations were set up initially to handle mail letters. And this day and age with e-commerce, they're all parcels. So they're not equipped to be able to manage the distribution of parcels efficiently across their campus. And this is why there's an opportunity for automated smart locker solutions.
Yeah, of course. And turning to the potential acquisition strategy. I mean, you spent most of the preso talking about the merits of the tenant app space and what you guys are looking for there. Can you sort of give us a bit more detail on what you view as the synergies that make this strategy make sense? Is it somewhere within the tech stack? And if not, why would you not just divest the lock business and go after a tenant app separately?
Because they're actually synergistic. They're complementary. Every rental property today, or any property, has package deliveries to them, particularly high density residential apartment buildings. Everybody has the problem of packages being delivered to the building. Okay, so there is a need in all of those buildings to basically have some sort of package management system. So what you're finding is that that is a standard utility in all of those buildings, right? Now, what we're seeing also is tenant apps that are basically being used to manage those package distribution, right? So to couple that with a smart locker solution and to sell a much more bundled, extensive offering to that sector, one sort of takes away the potential for commoditization with if you're just providing a locker system, and allows us the opportunity to leverage off a broader proposition that it could, that is effectively a SaaS-based solution, which is in line with our, stated strategy of growing our basically recurring revenue.
It's an interesting proposition, and to the best of my knowledge, it would probably make TZ somewhat unique on the ASX in terms of having a tenant app that investors can come into to play that theme. So we've had sort of some lived experience come through on the question lines here. So we've had one investor saying, "I was in a building with the tenant app. You could book the dining room, you could book the facilities, you could get a workman to put a TV on the wall and connect my utilities. I don't remember paying for this service. So the question is, who pays for the software?"
So typically it's done through the property management, and that's either purchased by the property developer, because like anything that's a utility, it becomes something that all building owners need to have as a capability within their offering. So in this smart building day and age, it's fast becoming something that is standard, that most, to keep them competitive and to keep them at the top, in terms of attracting tenants and so on, it's just something that they need to have. So it becomes part and parcel of the property development, and then sometimes the property management types proposition. It's the same as smart lockers, right? The tenant typically will pay a utility as they do in terms of their, I guess services, that they support to the building, and that's all included. Gym membership, whatever is available, it's just packaged up as the value-added services from the property developer or property manager.
Well, these property management systems, I presume there's a few of them out there, private and otherwise. And what one investor on the call has pointed out or asked the question regarding there's a business called Newbook, based in Queensland, that they've pointed out to us, newbook.cloud. I'm not sure if that's one that you're aware of, but you're Brisbane-based, John, I think. So
I haven't heard of them, but we do have a list of prospects that we are targeting. What we see is the opportunity to leverage our infrastructure, to basically, take a potentially early stage solution that has that's cash flow positive, that's established an Australian market, and then leapfrog that into all of our international markets, because we do have some very large customers, property development customers or property management groups, and that having effectively, since they're already established customer base for us, it allows us to really just leverage that channel to those customers in these international markets. So that's why I say it offers us this speed to market. We don't want to do something that's going to take years and years to basically deliver results. TZ has been around for a long time, and we need to basically show some significant change in what we're offering. Not that the existing and traditional business doesn't have the potential for growth, but we do want to get the market excited, and we do want to do something that will create some significant shareholder value.
yeah, well, I mean, certainly from your starting point now, I mean, I think you've got nearly 4 million in recurring revenue, and the market cap is only a little bit more than that. So,
Yeah.
so there's certainly a compelling argument to be made for the base business, and if you can augment.
Doesn't feel right, does it?
Well, but this is the thing. I mean, we've over the course of this security technology conference today, we've seen it pointed out a few times of the disconnect between valuations across the sector And as that's continued to persist, as revenues have started to come through for some of the comparable companies that are listed in the space, and it's not a situation that can persist forever. It's and value ultimately gets recognised either by investors or by strategics or by your peers. So yeah, and I guess as it relates to the balance sheet side of things, questions come in about sort of how cash flow is looking. So, given the shape of your balance sheet, I note that you've consumed a little bit of cash in the last over the last couple of quarters. And notwithstanding that there are some different things corporately that you're signposting that may happen, can you comment on how you plan to fund expansion and further revenue growth, at least in the base business?
Well, look, I think the first thing is that we've been able to basically operate and essentially maintain the same revenue base out of free cash flow this year. I mean, if you look at where we came from last year, prior to me coming on board to take back steerage of the company, we lost $5 million, okay, burning $1.2 million a month. We've significantly changed our structure to right set it and bring it back into sort of sensible operational focus based on the scale of the business, and we've been able to do that without losing any revenue. This year we expect to hit around the 14 million, which is what we did last year. So I honestly believe that we've cleaned up a lot of the inefficiencies in the way the business has been run in the past, and we set the foundations for really solid growth and a sustainable business model going forward. And I don't believe we've had that in the past. So I think that a lot of work has been done to really put us in a really good position. And on the back of that, it now gives us an opportunity to grow because we are cash flow positive. We've been cash flow positive and, over the course of this last year, I think all the 4 quarters have been cash flow positive, if I'm not mistaken. And, we've been able to not only fund the business, but also clear up a lot of legacy issues and legacy debt and other problems that we've had in the past that was created previously. So I'm feeling pretty good about it, obviously. I think it's a phenomenal turnaround, and I think we've got some great foundations for growth. And that's why we have to focus now on the next stage.
You're right about that, John. The turnaround is really impressive. So yeah, really thank everyone for your questions. We'll draw a line through it there. But on behalf of the company, I'd really like to thank everyone for tuning in to the NWR Security Tech Conference today. Really appreciate everyone joining us and for your continued interest in TZL. If you do have a question that we didn't get to today, please reach out. Management will be happy to discuss that further offline. We'll also make the video recording of this session available online at the NWR YouTube channel. Really looking forward to the opportunity to talk to you all again. And John, I might pass across to you now for any closing comments.
I welcome the opportunity. I thank you for taking the time to have a listen to what we're doing. Thank you, guys.
Thanks, John. Thanks, everyone. Chat to you again soon. Cheers.
All right, cheers. Bye now.